In this video, I want to talk about analysis paralysis in investing. Many of you are in this exact situation where you have too much information, you don't know how to decide. So in this video, I will give you 5 tips to finally make confident decisions that will help you as a retail investor. So maybe you are in this situation and I want to help you with this. 5 actionable tips that you can use right away. And if you follow these 5 steps, I guarantee that your performance in the stock market will improve. You will avoid wasting your precious time into unprofitable companies that are not good. The goal of investing is not to look at everything, right? We want to focus our attention with the best opportunities in the stock market. And it's exactly what focused investing will help you achieve. In case this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year, investing in a focused way, right? Without analysis paralysis. And many of my clients came to me first, and we have a call, and they have this problem of analysis paralysis. So let's start with the first point, how to make a confident investing decision. The first point is to set a clear filter system. Only look at companies that meet 3 to 5 specific criteria. For example, profitability, a moat, a competitive advantage, or low debt. If it doesn't fit, you move on immediately. So now I want to make things different because the situation is different based on your situation, depending on your age, depending on your risk tolerance, age to risk tolerance, family requirements. Maybe you need some capital to buy a new house or things like this. For each person, you will have a specific criteria that you will have to meet. For example, some people are very risk averse. For this kind of people, you don't want to buy companies, stocks, businesses that have a lot of debt. For some other people that are, I would say, more risk tolerant, you want a certain threshold of growth. So I'm asking you, watching this video, what is your style? What is your investing style? Either value investing or growth investing. This is not the same lifestyle. This is not the same mindset. Either you want a lot of growth in your portfolio, like 20% per year, or maybe you want to play safe and avoid unnecessary risks. Depending on your investing style, you must choose, let's say, 3 criteria to invest in stocks. And when you are looking at companies, you just have your clear checklist of these 3 criteria, for example, and is this company meeting your criteria? If it doesn't meet your criteria that you are very selective about, please move on. This philosophy of being very restrictive and being a harsh grader will help you save some time. In the stock market, you have more than 50,000 stocks, more than 50,000 opportunities. You don't have the time to look at everything. So only look at companies that fit your criteria. It's a complete waste of time to follow everything or to not be a harsh grader, to be curious about everything, but it has potential, so maybe I should look into it. No, come on guys, you have 50,000 companies in the universe of the stock market, so you have the time to only look at potential opportunities. So ask yourself the question, do I like risk? Do I hate risk? Do I like debt? Do I hate debt? Do I want to invest in companies with a moat, or do I want to companies in profitable industries, growing industries? Do I want mature businesses like, for example, eBay, for example, PayPal, for example, like companies that are mature, generating cash flows but not growing that much? So it's all about capital allocation and buybacks, these kind of things. Do I want to invest in companies that pay a dividend? These kind of questions, guys. So select the 3 key filters and be a harsh grader. Only move on if companies are within your filters, inside your circle of competence, and you are very selective. If it doesn't fit, you just move on immediately. You have clear screening tools that can help you do so. like Fiscal AI or Stock Unlock. You can use a screening tool. You have both links in my description if you want to use these websites with a discount. Yeah, I mean, even if you focus on only three things, you can find terrific investment ideas, wonderful investment ideas. Now, second point, that you know a little bit how to focus your attention. Second point is to limit your research time. Give yourself a strict 1 hour and a half, 90-minute deadline to analyze a stock. You're not trying to be perfect, you're trying to be effective. Most of the investing decisions can be made in 1 hour or two. You only need 70% of the information to make an informed decision. And after 1 hour or two of research, you will immediately know if this is an investment for you or not. You will immediately know if you really understand this business model, if it is really inside your circle of competence. If after 90 minutes you are not sure, well, you already know the answer. If you hesitate if something is within your circle of competence or not, it means it's out of your circle of competence. If after 90 minutes you are still not sure, it means it's a no. The best investments I've made for the past decade have been investments that shocked me. Like, you are hit 2x4, you say this is amazing, unbelievable, the most simple investment themes most of the time. You need to find these golden opportunities. And you can't find these golden opportunities if you waste your precious time with bad companies. I had a call 2 weeks ago with somebody that wanted to join the coaching program, and this person spent more than 10 hours on a company, spent like the whole weekend on a company. And at the end of the 10 hours, he said, you know what? No, I don't really understand what they do. No. All this precious time, 10 hours that could have been spent with a profitable company that you understand really well. At the end of this 10 to 12 hours of research, he literally said, no, I'm not convinced, because he doesn't have the tool. He doesn't have the tool to spot companies that are inside his circle of competence. How much what you don't know is costing you. You don't know what you don't know, right? So if you don't have a framework to analyze stocks, if you don't have a framework to pick the best stocks, how can you be profitable in your investing, in your investments? The best way to outperform the market, to have a good performance, to generate alpha in this market, is to know what you're doing. If you don't have a framework, you don't know what you're doing. So be very strict about the companies you monitor. Be very strict with the companies you select. Be very strict with your time. Be time efficient, guys. You don't spend time on companies that are not profitable, that have a lot of debt, that don't have a moat, that are outside your circle of competence, right?
By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video.
Third point, the goal is to be as effective as possible. Third point is to use a predefined checklist. Before starting any analysis, run every stock through a checklist to avoid emotional decision making. Yes, we want to invest the Warren Buffett way. We want to remove emotions from our investing decisions. So a checklist helps. A checklist definitely helps. For example, I mean, you can copy this for your own style. Is the company growing? Is the company profitable? Do you have high insider ownership? Is the company founder-led? Is this in a growing industry, a growing niche? Is this inside my circle of competence? Is the valuation reasonable or cheap? Are the margins increasing? These are 8 points. And I guarantee you that not all companies will fit these 8 points. That is just on the top of my head, the first 8 points that came on up, but you had plenty of points to check, to verify before buying an investment. Valuation is maybe the most important one, by the way. So if you are struggling with analysis paralysis, you have too much information, having a strict checklist will save you hundreds of hours actually. So I mean, you can generate any checklist on ChatGPT. You can steal an image. You type on Google Warren Buffett's checklist, and somebody else will do the work for you. So please use a checklist. Please be very restrictive. So you start from a investment universe of hundreds and hundreds and hundreds of companies, and if you are very restrictive, you will find only 20 companies. So now the priority you should have, given you have 20 companies, is to do the research. Research these 20 companies, and out of these 20 companies, maybe you will find 3 or 4 that you will find very interesting at a very good price. This is where the work must be done. Must be done to 3 or 4 companies, and you invest in these ones and you outperform the market. This is very simple actually. Investing is simple, not easy, because you can spend a lot of time on unnecessary things, but it is quite simple. Fourth point, trust your first logical conclusion. Once a stock passes your framework, act. Overthinking usually leads to missed opportunities, not better results. I see many people on the internet that want to fact check everything. They want to verify everything. They want to spend more hours on research. They know everything about the company. Still, they don't act because they want the valuation to be a little bit lower. So they greed a little bit. They overthink. They find the best counterpoints, counter arguments. They want to read all the stock stacks available, all the videos all available. They want to watch everything. But actually, a lot of people in this situation know a lot about the company already. They just have all the information, but they just don't act. At some point, you need to act, right? You need to invest, at least start a position. If you don't want to create a full position in your portfolio, you can buy in several tranches. You buy once, and then a second time, and then a third time, and you build your whole position in 3 steps, for example. You can do it in 2 steps, 3 steps, 5 steps, but at least act. Some of the best investors of our time don't start a position upfront as a lump sum money. They just create a starting position, a watching position, as we say, and then they build up the position with time. We invest for the long term, so we are not in a hurry actually. You can start a position of 2% of your portfolio, and then the stock continues to drop, so you buy more. The stock continues to drop, you buy more, because you build more conviction over time. But acting is a key problem most people have when they are paralyzed by too much information. They are doubting themselves. Please don't doubt yourself because you've done the work before. If you have done the work of these 3 key points, doing the research, being very efficient with your time, having a clear checklist, you know more about this company, about this stock than most people. I guarantee you, I've seen this example countless times. So please act, at least start the position, right? And the last point is focus on business quality, not perfect timing. It's impossible to time the market. Even Warren Buffett can't time the market. Long-term outperformance comes from owning great businesses, not from analyzing tiny short-term details. Yeah, that's about timing the market, seeing headlines, scary headlines in the market, seeing what the market moves every day of the week. On a Monday, the market goes up, Tuesday, the market goes down, and then they stress about it, they have anxiety. Come on, if you are really a long-term investor and you want to outperform the market, short-term moves will have no impact on your business. If the stock goes down 2% or goes up by 3% in one day, it is not the reason why you will outperform the market. The main reason why people outperform the market is the way they are very selective about businesses, I would say. Very selective about stocks. And I've built most of my alpha in this market buying into business quality stocks. So businesses that are superior compared to average, businesses that are rewarding shareholders, companies that love their shareholders, companies that are growing, companies that are profitable, companies that generate a lot of free cash flow, companies that have a moat, they have a competitive advantage, and companies with a good valuation. I did not generate 25% per year buying the perfect tick, the perfect bottom of a stock. It's impossible to do this. I mean, you can do it for maybe one stock, but you have a portfolio of stocks, right? Imagine you have 10 stocks. It will be very lucky for you to buy a stock at the perfect timing for every one of your stock. I know nobody that has done this in the past. So the best scenario would be you buy something first, it continues to go down, you buy again, it continues to go down, you buy again, and then a couple of weeks after this, it starts to go up when you have built your whole position, I would say. So actually the best scenario is when you buy, the stock continues to drop. This is counterintuitive, but this is how you can generate outperformance, because it lowers your average price. I've done this a couple of times, actually many times. I buy something, it goes down, I double down, and then it goes up. This is how it's done. Markets are irrational sometimes. Markets are very volatile, especially now in 2025. So you want to be ready to always have an edge in your portfolio and be ready in case anything can happen. So these were 5 tips to help you in the analysis paralysis in investing.
If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address, just click the first link in the description and I'll see you on the other side.